Michael Burry dropped $1.1 billion bet against the biggest AI names in the game, Palantir and NVDA. The same guy that called the 2008 crash thinks the AI boom is about to bust. Now, let's not forget, he did sit in that trade for 2 years as a losing trade before it panned out and made history. And right now, consumer confidence just hit its lowest level in 20 years. Lower than a pandemic, everyone is panicking. And I want us to understand something. While everybody gets panicking, this is the perfect time for us as investors to build wealth. Because when the world is screaming fear, the wealthy is quietly buying. Because the market really doesn't reward who's the loudest. It rewards who can play the game the longest. And so today in this video, we're going to walk through what does this look like in Michael Burry's portfolio. But also, here's 2 stocks that I'm buying, adding in the Robinhood account so you all can see. Because y'all know the goal is to build that account up. But also to break down the market in a way that you can understand so that you can take full advantage of it. And we can make some money along the way. So before we get into this video, make sure you like, make sure you subscribe, and make sure you share this video out for me, man. Let me get 2,000 likes on this video because it can truly help the channel. And with no further ado, I don't waste your time. Let's get into it. We all heard of Michael Burry when we saw the movie The Big Short. The guy made a fortune from shorting the 2008 financial crisis. But what people don't talk about is he held that trade for 2 years. That's right. He held that trade from 2005 to 2007. It was a losing trade. He was down a whole lot of money. And so when we see people like him say that they're shorting the market, yes, that was a brilliant move. And he's earned the right to be a genius of his time for that. But a lot of people can mistake that situation and think that this is about to happen right now. And so we'll look at this bet that he made against NVIDIA and against Palantir, 2 stocks that actually are killing it and who are big dogs in the AI space. Now, he had a $912 million short on Palantir and a $200 million short on NVIDIA. The 2 names that actually lead the AI revolution. And the bears are loving it. They're saying AI is overhyped, overvalued, and out of control. We got to admit, truth is truth. NVIDIA is cheap right now compared to Costco, Walmart, and some other companies. But Palantir, 100% with a 700% PE ratio, it is really high. But growth always has a price. And if we go through time and time again, we'll see there was points when Tesla had an 800 PE. We'll see when Microsoft, Amazon, Netflix, and some of the greatest companies that we love now had out of this world PE ratios. If you don't know what a PE ratio is, it's the price to earnings. So it tells us, what are we willing to pay for $1 of a company's earnings? So if a company like Palantir has a 700 PE ratio, you're paying $700 for $1 of a company's earnings. Now, that being said, we also know that as time passed, those companies started having revenues and earnings that outgrew actually what the stock price was doing. And so those PE ratios came down. We know that a company like Palantir has great profits. The earnings were through the roof. They actually had big earnings, big revenue. They actually added more government contracts and they gave forward guidance. So unlike the dot-com bubble, this company is creating real revenue, real earnings, and real, impact. Now remember, the internet in 1999, people said it was all hype. Amazon was called the bookstore. Apple, was left for dead. Those who ignored the fear and focused on the fundamentals to build generational wealth, they paid off. Remember, Amazon stock went down. The only people that held on to that stock for the 10 years that it wasn't really doing well was Jeff Bezos, his mom, and his daddy. Everybody else, they got out. So the question is, why are people suddenly scared? Well, let's dig a little deeper into that. Because of the headlines. OpenAI right now, Sam Altman, $1.7 trillion in spend that they plan to do with less than $20 billion in revenue. That's what got the bears really foaming at the mouth. They're saying that the math just does not work. they're saying, they're looking at OpenAI and they're saying, bro, like, y'all not really making that kind of money. And there's an interview out where a well-known investor is asking Sam Altman that, and his response was, bruh, you can just sell your shares. I know a lot of people that are buying. Now, I understand you're a confident CEO, but that is a legitimate question, right? And with the idea of OpenAI IPOing as a $1 trillion company, I don't know how we even get there, but here's the truth. Innovation always spins before it pays. I'm going to say that again. Innovation always spins heavy. I'm going to add that in there before it pays heavy. The infrastructure phase always looks insane, well, before it looks inevitable. 5 years from now, maybe even 10 years from now, we'll be looking at OpenAI like, bruh, I should have gotten that. And Sam Altman is actually flirting with the idea of going public. He's saying he wants to go public and he wants to crush short sellers who don't believe in what he's doing. It's just like the railroads, the internet, and EVs. Early capital spending looks reckless. Then suddenly, one day, it becomes the backbone of the next economy. So, I said all that to say, you don't build the future when it's safe. You build when everyone thinks you're crazy. And I gotta admit, a lot of people are looking at Sam Altman like he's crazy. The great thing about innovation is it looks crazy in the beginning. Who would have thought Amazon would be the everything store? Who would have thought Apple would be the way it is? Who would have thought that Netflix would do what it's doing now? Who would have thought the guy that is responsible for the graphics on Mortal Kombat would be the leader of the first $5 trillion company in the world? Who would have thought?
Whoop-de-doo.
Well, now's the time. But let's dig a little deeper. Here's what is wild. Consumer sentiment is now low. Here's a chart to prove it. It's at 52, y'all, and decreasing. People just don't believe in the future. People don't believe in the economy right now. And to put that in perspective, during the pandemic in 2020, consumer sentiment is at 115. We talking about a global crisis is going on, and people still like, yo, I look forward to see what's happening. You think it had anything to do with those stimulus checks? I don't know. But what that means is people feel worse now than when the entire world was shut down. And that says a lot about the state that we in. There are a lot more things to be at concern. But nothing concerns me more than a whole country being shut down. We've never been in a world we can't touch each other. Well, that's exactly the best time to buy assets. And so when people are scared, they stop buying, prices drop. And when people feel confident, they chase. Prices are already gone. So fear, almost we can say fear compresses the valuations, but fear gives us and builds opportunity. And that's why I'm not running from the red counters. We have a government shutdown that's about to be signed. I truly feel that the market will run for the last 2 months. Because the stat that came out, I talked about it on my show, Trapping Tuesdays, that there's been 6 times in history since 1928 until now, there's only been 6 times where the market has been up 6 straight months. Now watch this stat. 5 out of the 6 times November was positive. 4 out of the 6 times December was positive. 5 out of the 6 times November and December combined gave up a positive return, which means there's a likelihood, if we just look at that data, that 2025 November will be positive. And there's a great chance that 2025 December will be positive, which means we probably can hit about 7,000 on the S&P 500, which is a great year. And so because of that, here's 2 stocks that I'm buying. And of course, I'm going to add them to the Robinhood portfolio for this channel. Now, these are interesting stocks. One is a big dog. One is not as known, but it's popular. So let's get into it. The first one I'm buying right now is BBAI. As you can see right here, I'll purchase some shares of it. We're going to start small. Now, they're not a household name yet, but they're solving real military problems and enterprise problems. Almost like who? Palantir. Data modeling AI analytics and simulation. This isn't hype software, it's defensive grade AI. Their clients, they are not teenagers, they're government agencies. The stock is down, nice bit from its all-time high, but on earnings, they beat expectations and guided stronger for next year. What does that tell me? Institutions are quietly accumulating, wait for sentiment to flip. So once sentiment flips, breakout. Think about it. AI isn't one company, it's an entire ecosystem. And Big Bear is definitely going to be an essential part of this ecosystem. So the stock being at the price is at right now, I think we got a good chance to go to $8. Next on the list is the giant, Amazon. Most people think of them as the e-commerce company. But the real beast inside Amazon is AWS. The cloud, their infrastructure, and the AI infrastructure that they're doing. And we saw how big AWS was because a couple weeks ago they had a scare, and what we saw Netflix, we saw Robinhood, we saw so many companies impacted. AWS powers more AI tools than any single company on earth. OpenAI, startups, enterprise models, all run through AWS. During earnings call, Amazon didn't just survive, they outperformed on margins and cash flow. They actually blew all other Mag 7s out the gate for what they did. That's strength and uncertainty. If AI is truly the next revolution, and we see it coming, Amazon 100% is one of the legs that it will stand on. I'm buying Amazon. The stock is off the highs, but the fundamentals are great. Screaming long-term accumulation isn't about next week. It's about the next decade, y'all. I believe that everybody should own one share of Amazon at least. Now, every panic in history follows the same formula. Something new rises, and it comes really fast. People call it a bubble. Fear spikes. Headlines go crazy. The strong buy. Everybody else hesitates. Michael Burry might be short right now, and we can't take away from his genius of what he did. But long-term investors, man, don't play panic. You play positioning. You don't buy confidence. You buy uncertainty. You don't buy euphoria. You buy exhaustion. You don't buy when it's easy. You buy when it's confusing to everybody else. Because those are the times where you got to be bold enough to say, I can see the light and I can hear through the noise. Fear is everywhere right now. And really, that's the gift, y'all. Because markets don't move with logic, they move with emotion. And emotion always swings too far. So while they're debating if AI is a bubble, I hope you and me together are building the future inside it. BBAI and Amazon aren't just trades, they're time machines. They're bets on the next economy. When fear hits the front page, that's when wealth changes hands. And so I want you to do something for me, man. I want you to comment below and tell me what stock that you are buying in fear. And let's see who's really long-term thinking. It's your boy, the Wall Street Trapper, man. And Wall Street looks like us now. Make sure you like, make sure you subscribe, and make sure you share this video. Salute.